Hello, hello, hello. Happy Inflation Wednesday. How's everyone doing? Good morning, Sterling. It's your day off to celebrate inflation. I think it's your day off. Good morning, Patrick. Good morning, Jacob. Well, it's Wednesday, yes, so far, but holding still key lows. We'll see how it progresses into the open. Good morning, Heinrich. Good morning, Legion Reaver. Medium term rollover incoming. So far we haven't broken the key lows. I'm expecting it again. The mark, a lot of sell setups there. Some Elliott wave setups are in place, but we really need the markets to actually start selling off. Because remember, there's two types of corrections, and so far on the larger scale, it's been a sideways correction. But we could easily get back into that weekly rotation zone. Good morning, Mark. Where'd you get that from, Sterling? Just wondering. Highest level of cumulative inflation since 1913. This beat out the 70s? Really? We'll get to the numbers in a second, but thank you for posting them in here. Good morning, John. Good morning, Tony. The Fed rate cuts is September from June. I doubt they'll cut September. That would be really political. We'd have to have like inflation completely roll over and going to significant disinflation before they cut in September. I think the latest they can really cut is July, and that's getting doubtful based off these numbers. I mean, everybody's still on when are they going to cut? When are they going to cut? Well, these numbers really don't lead that way. All right. So we had the mortgage stuff out. Mortgage rates over 7% again. That sort of got lost in the fact with the core inflation. Core inflation month over month 0.4. Year over year 3.8 versus 3.7 expected. The headline inflation number 0.4 versus 0.3 expected. And the year over year 3.5 versus 3.4 expected, up from 3.2 prior. What do we got? We got Bowman. I haven't heard anything yet from him. Has he been speaking yet? I was supposed to start at 7:45, but sometimes their times are off. Remember, for crude traders, we got the crude numbers coming out at 9:30 Central. We've got Goolsby speaking. We still have the FOMC minutes. Now, I think CPI is going to really overshadow, though. But, for people looking for any glimmer of Fed hope, it might be in the last. These are the minutes from the last meeting. So for March. Then tomorrow we got the PPI numbers. So far, the market you really see not liking the inflation figures. Everything red. By the way, NVIDIA yesterday confirmed but not triggered officially the double top. We'll have to peek in at Apple. DAL, Delta Airlines, released earnings, was a beat. They're up with the beat. So that's about it. Everything is negative so far. Everything's negative with technology leading the way down. Fed Watch tool. Again, it's always been for a pause in May. Now it's a pause in June and and potentially another pause in July, with the first cut being on the Fed Watch tool in September, which is in line with what Sterling posted. What else have I missed? Good morning, Anissa. Thank you for tuning in. Chief Economics at Fitch highlights a specific measure. Yeah, the super core is also very hot. The super core, which Sterling's posting that in, and a lot of people talk about the super core and track it. It is very hot. The measure surged from 3.9 year over year in February to 4.8 in March. That is not the right direction of stuff. So if you're looking at these kind of things, even if it drops, I mean, let's say next month it comes in a little lighter, it's nowhere near. And I know they said we want to cut before it gets to 2%, but you're still running in the mid to upper threes, depending on your inflation measures. That's not even below 3. And it's been ticking up again. And oil, which translates into gas prices and everything, oil, is still holding up. And you have copper and silver. All right, fear and greed. Well, this is we're going to see if it gets to neutral, and let's see if it can actually get down to fear or something before this in the next few weeks. So that's where we sit there. Again, Delta was this morning with a beat and a gap up. Nothing really after the close, and tomorrow we got Constellation Brands and CarMax. But remember, Friday when I'm not going to be live streaming, we got the kickoff of first quarter earnings. I will still be here tomorrow, though. All right. Good morning from DR. DR. What am I missing? Where's DR? Somebody remind me, please. Thank you for tuning in. Options the World Traveler, Options 22. When you get some internet, I'd like to hear some instruction on an Elliott wave theory and how you use it in my workflow. I use it for the bigger picture signals. We can probably go over that once I'm back in the saddle. The 1913 statistic was based on inflation being calculated without the changes and exclusions they have made over the years. Okay. Yeah, auto insurance is going nuts again. So, it's going to be real interesting now. The S&P holding very key support going into the open, coming down right by that minor harmonic, this 5174 area, but the next intermediate, should the sell-off continue, and I'm really going to watch because now especially 5200 is resistance. 5200 is resistance, and then above that is about 5215. Then we are back to 5235 on any upside. But you see here still stair stepping lower. If we look at the weekly, it's finally reconnected with the rotation zone, but we start chopping into this. We could easily, over the next few weeks, see back to 5,000. Would not surprise me at all. Now, today, we start breaking down through 5175, 5174, 5175. My next level is about 5157. We still have a key little area of about 5161. So 5157 to 5161. And if that breaks, 5130 is very key. Now, we might not get there today, but if we continue to sell off with the PPI numbers tomorrow, 5130 would be my next key target. All right, that's where that stands. Let me pull off some of these older lines. We'll put them back on if necessary. So that's exactly what I'm watching for today. NASDAQ also could not get above that 62.5 and reversing between the 50 and 62.5. Holding the key support, 1840. 1840 is a very key support level and a very significant level. We break below that, we have the 50 right at this 18,000 level, which is virtually the low back from Friday. You see here the NASDAQ, this is a perfect example in the bigger picture of so far it's a sideways correction. Now that could definitely change and we can get the bigger pullback, but you see how really since, if you look, since we broke out in February, we're virtually trading back to the same breakout level. Okay, so that's why this is so key. And we still have the potential very extended to the right double top, which then I would look at especially the first and second targets based off that weekly chart. But if we break that 18K, it also breaks the 50 EMA. All right, so that's what I would be... let me adjust this. I got to ratchet this up at some point. There we go. But that's what I'd be watching. So intermediate area would be about 17,835 and 17,663. But again, watch this shorter term stuff. Now on the upside, I'm using the harmonic retracements of 18,140, 18,216. And let's just look at the shorter term charts because really you can watch Tuesday's spike low, 18,160. So about 18,140, then 18,160 would be on any bounce and rollover zone for me. What else we got in here? Oh, DR, Dominican Republic. Thank you, Sterling. Thank you. So options 22 from the Dominican Republic. All right. Bowman does not commentate. Boy, I can speak well, can't I? Comment on monetary policy. My man says 16K is the next target. My man says 16K bearish. It does have a bearish divergence. I can't go to 16K. Well, let's see. Because my next target, the major support area, if we continue, especially if we break the weekly rotation zone for the NASDAQ, my next major target is 16,400, which would be the 50% retracement from the October to March highs. That would be my next major target, should we slice through the weekly rotation zone. The Dow, in the weekly rotation zone, the Dow also breaking key support, breaking the support from the lows last Friday. Now the Dow's in between the 50 and the 62.5 area. So minor area coming in about 38.6. Major for the Dow is 38.450. You close below 38.450, that's not good for the Dow. Also remember, we've had the crossover, so on the Dow we're bearish. We again broke key support, so that's now resistance. 38.875 to 38.9 is resistance, and you see here the Dow getting pretty well into the rotation zone. So going to be interesting to see with this, and we still have weekly cycles going down the Dow. Russell Ox getting slaughtered, breaking down through the channel, breaking down through the 50. Now, let me clean off this real quick because this channel is now over. Unless we really rally back, then I'll put it back. But never got above the 62.5 right here. Rolled over. Now we're looking at, came down to the 50% retracement from the lows in January to the highs in April. April 1st. April Fools. So I'm going to be watching where it closes in relation to 2035.9 because we start closing below there. My next target is back to 2003. 2000 to 2003, but a close below 2003 technically shifts the probabilities back for a potential retest of the January lows. The VIX, not liking the number either. Rotating back up. So the double, which officially triggered on the VIX, got slaughtered. The DAX, the double's out of play. The potential double's out of play there, obviously. So the DAX consider bigger pullback. The next key target on the DAX, just with key levels, is about 18,180. 18,180, and also the DAX closing at the bottom of the rotation zone yesterday and now breaking it. So really going to be watching for this correction in the DAX. The notes almost back down to the key 62.5 and the final target based off the futures. These are the futures. All right, that key area is 108.13.5, and then 108.11 is very key on a closing basis. The yield spiking up, finally hitting the second target. 4.49, so roughly 4.5, spiking up. Now, my next key area is 4.55, especially on a closing basis. It might stall out up in here, so keep an eye on that. But the channel's still holding. The twos also, look at the rocket ship in the twos. Definitely closing above the 62.5 unless something shocking happens today. But hitting that 75% harmonic, and the next target for that is back over 5 on the 2 years. The 10 twos heading back down. The dollar index also, this was another %B buy. The last one came back down and then did not work out so well. But this one, the break above yesterday's high, and this is, if we reproduce what happened on Friday the 5th, I'd be shocked. I'd be shocked if this can sell all the way back down. But it's, it's a little late to the game now. You can't just enter on the close from my perspective. Although you do have, it's also a rotation back up because the rotation zone did hold yesterday, spike below it and close in it, and now the move back up. Still, 105.57 is the next major target. Yeah, thank you, Options 22. How are you on vacation, Options 22, or yeah, that could be a market maker, a market mover up to the 10-year note auction at 1 p.m. Are you on vacation, Options 22, or is that for work? Hope it's vacation. Crude, remember we got the EIA numbers coming out in just over an hour, so that's going to be the real driver of crude today. But so far, this little pullback correction getting closer to cycle bottoms, but not there yet. And if the double, still the sloppy double is in play, but if that triggers, it's against the rotation zone, so I'd really be looking at the first target area about 83.50. Gold finally pulling back. Gold finally pulling back. Not much to talk about. We'll be glad to see this get back down to cycle bottoms and really out of this overbought mode. My key support is about 23.15 at this point. Silver also starting to pull back, but we're going to be watching for the pullbacks in the next rotation back up. Silver back major is 27. Copper major support area is about 421. Yen, look at this. Remember that base? The base forming at the highs back from November and now breaking through. The Bank of Japan cannot be happy with this, so the yen weakening. 153.35 area is the next key target. We're after going to see what they can do with, if they're going to intervene or not, and then the next major target is all the way up around 155. The only thing that can stop this in short term is if intervention. Euro could not close above the 62.5, coming right up there yesterday, and then pulling back between the 50 and the 62.5, and then we got the rotation down today. So that's with the dollar index. I'm going to be really keying off of to see if the euro now, the euro 107. You see how it came back down here before? Not closing below the 62.5 right here, and then recovering. And now then rolling over again. So the bigger picture, 107 is very key for the euro. Nothing to talk about with the pound. Spiders, gap down today. So you're going to have to draw your own retracement. 512.80, 512.76. What's this low here? 512.76. So below 512.76, 512.24, and then 510.18. Also remember, there's still a gap left behind from March. Okay? With the first target, I actually used the open from that day, 510.21, and to the close would be 509.83. Now, if we break below these lows from the 4th of April, you're going to have to update the harmonics, but the next key rally, if it bounces back, is 514.25. Is the very key. You have a gap open right around that area and that low for the day. You have the low from yesterday and you have a harmonic cluster. So keep that in mind. 514.13. The next key area above that. Next key area above that would be about 515.75. The Qs. Come on, Qs. Q it up. 436.74, so 435.11. Then below that we have about 434.20 and then 432.74. Key areas 436.80, right around that area with have the gap up open from Friday the 5th, which is technically 436.78. So that's 436.80, and then to about 437.50 would be the next one, and then 438.65. Bitcoin rolling over also with the selling pressure today, but nowhere near triggering the double yet and still in the channel. What else? We have NVIDIA. I talked about that. NVIDIA looking to still gap down below the key trigger area, 841.66, so that's still to watch on the closing basis. It confirmed, but not officially triggered the double. I would not ignore this 808 level. I would not ignore the 808 level, by the way. But NVIDIA is definitely changing. Tesla, still holding up. I mean, this thing might hold up till earnings, but we'll see. A lot of dip buying still coming in with Tesla, but not much else to talk about there. Real quick, you had the Intel announcement with their little new thing. Daily cycles at the bottom. Now, this could be, we talked about pairs trades yesterday. After it completed the double, I could take that off now. But at that 50% retracement, 50% retracement from the lows of last March to the highs of December, 50% retracement per possible percent B buy setups against that 50%. This could be interesting, could be, that long Intel, short NVIDIA. They're announcing their new competition chip to NVIDIA. So, NVIDIA is very overdone. I'm not recommending this, but this could be something we talked about yesterday with Sterling's question. Same industry. NVIDIA's overdone and could be triggering a double top. This could be triggering at least a short-term bounce play. Something to consider. Not saying it would where I have not fully vetted it yet, but I'm just bringing that up because we talked about it yesterday. So, that's the kind of things I like to investigate. Apple. Why am I looking at Apple? Because, remember, we start breaking, especially below this base at 168. If we get selling pressure in Apple today, could really start dragging stuff lower. Yeah, would not want to be short the yen in the futures. I mean, in the spot, not the futures. The futures, I remember the futures trade opposite the spot. What else do we have? Let's just take a look at some other mega caps. So, Meta, looks like we're gapping down today. Still, it's got to get back. It's really got to start dropping below this 480 area before it gets concerning. But if you start dropping below that, that's more concerning. Google, by the way, the double's off the table, the potential double. But you're going to get a gap down there. Still, Google at this point, unless we start dropping below 150, not really. We got to start seeing some of these other mega caps roll over before we really can get a market to sort of start really breaking down. All right, let's take a look at the S&P going back into the open. So any bounce? Oh, is that a little? Yeah. The only thing I'd be watching going into the open is at least a 5-minute close above 5,250. Could be a little bounce move against all the rotation zones. So that would be a little quick. I'd actually be watching for the bounce and then the roll over play. But, if you were looking for that, and that's only a 5-minute double. So that's nothing to get hog wild about. But see, that would be just a little bounce into the 5-minute rotation zone. Not even into the 15-minute rotation zone, and I wouldn't even look at the full third target on that if that were to trigger. But remember, the hour, all these rotation zones are lower on the shorter term time frames now. So I'm going to be really watching because we should have a very negative tick opening. So on any tick bounce back, I'm going to be watching for any market rally and then the next rollover play. Well, that's a very good. That's why you're asking the good questions. You don't do it one for one. Okay, you actually have to structure it with. You're going to be putting on a lot more Intel than NVIDIA. And that's a little too much to discuss with going into the open right now. So you're going to do the ratio, all right, and then you're going to structure because you want that ratio closer to 1-to-1. But again, that's something we'll have to probably, if you want to talk more about pairs trading, we'll have to do it after the move. All right, these are some advanced topics for a lot of people. A lot of people don't even consider pairs trading. All right, that's really about it. Let's just peek at the NASDAQ again. You got a little mini double in the NASDAQ too. These would be stuff I'd be watching for the bounce and the rollover plays though. Unless something drastically changes, would not be looking to aggressively get long with this number. There might be some insane dip buyers, but is got to form a stronger bottoming pattern in a 5-minute from my perspective. All right. Thank you for tuning in, everyone. I will be back for the last live stream tomorrow for a bit, so make sure you tune into that one. Make sure you tune into that one. We got the PPI numbers tomorrow, and I will talk to everyone then. Bye for now.